What's up, traders? It's your boy Ace Boogie coming to you live and direct. Wanted to do a quick trade recap review video on CAN, ticker symbol CAN. Right here is the daily chart. I want to really talk about the things I did good and the things I could have done better with this particular trade. As you can see, yesterday CAN had the big up day from the mid fours all the way to the mid eights. But as you can see, towards the latter end of the day, it got stuffed right into this resistance from back here in November, December, 2017. I'm sorry, 2019. Um, so after the big day, it's gapping down this morning. So as far as pattern identification, this is starting to formulate what we look for as an overextended gap down type play. And I saw it this morning. I saw it trading, I want to say around 740s in the pre-market, but I left it alone and I wanted to wait for the market open to see if it'll actually play out the way, overextended gap downs are supposed to play out. So let's pull up the intraday chart. I got some notes in here. So here's the big run up yesterday. Um, you see it started to top off, towards the afternoon and the mid to high eights, and kind of fizzled away. I thought it was going to come back after hours. I was actually looking at it at the 780s, maybe entering a short position here, but I wanted to play it more conservatively. So this morning as I was opening up, remember I said I saw it in like the 740, almost near 750s. I caught it right in this time right here, but I let it go. Um, but later on, pre-market, it actually started to unwind a little bit and went all the way down. I want to say, where did it get down to? Get down to the low sevens. It didn't crack seven in the pre-market. We went all the way down to the low sevens. So market open, it had flushed down all the way to 669, or this is the 5 minute chart. I think it was 667 or 666 to make a lower day. And then from there it started bouncing. So I'll show you what it looks like on that bounce. So it had a nice decent sell off in the morning right here, and then it started bouncing, bouncing, bouncing. And I was trying to see if it was going to even touch 750. That's naturally going to be a magnet area, but in this instance, it'll be a ceiling area. Sometimes you get them to pop through 750 and you're able to get executions up here um, in this bounce short. Sometimes you don't. So once I saw it, it started to top off around 745. I went ahead through an order in, just below the bid around 737. Only filled 100 shares, because I was expecting it to maybe to chill out, maybe do something else. That bounce was picture perfect. That was the best bounce we got. It actually tried to bounce up again right here. I really should have been filling some shares into this spike up, but I was looking at other things and I was, talking in chat, so I didn't get my fill right here. But this would have been ideal to get another execution right here in these 730s, um, as in a lower high. Another execution that I missed, I was looking for the crack the VWAP, but it happened so fast, I didn't want to chase it all the way down in this candle under seven, which, I probably could have done just because in pre-market, that was the real support zone was $7. So when it breaks under that and breaks under VWAP after an attempted bounce twice, it's real bearish at that point. So first it came down, or it continued to come down, and right at the lower day, it bounced. So it kind of made on the 1 minute candle, it made a triple bottom. But I was looking at it on the 5 minutes. 5 minute candles, and it made like a double bottom here and here. So at first I was a little bit concerned, but I was gonna see how it did when it tried to come up and retest VWAP in that $7 area, or really to the 680s, 680s, 690s. So it didn't do that. It bounced up and it got stuffed right at 690, 687, right in there. So I got stuff right in here. So I couldn't even get all the way back to where the VWAP was at. And from there, it just cracked. It cracked on the lower day. And my plan was, cover into the weakness after the crack into the lower day. I wish I could have waited a little bit longer. Um, but this was the predictable part of the move right here. Once it cracks past here, it's going to drop down another leg or so. And I wanted to, just take advantage of this move right here. I knew I didn't have a big position, so I didn't want to let my P&L determine, when I should exit my stock or exit my position. So I just aimed for 10%. So when I shorted up here at, 737 and covered here at 660, 10%, good enough for gold. So that was my short trade. As you can see, this was a picture perfect overextended gap down play. It worked out way better than I expected. Um, and I should have been more aggressive. Should have been more aggressive on the shorting into the bounce. And I should have been more aggressive on, waiting for it to find a bottom for the cover. Things I can, improve on here and there. But I wanted to make a point to make a conservative trade just because I'm coming off a big win on HENC from the previous day. And, looking back at my own personal statistics, I usually give back a lot of my gains, right after I get big gains, big winners. So I'm trying to curve that characteristic in my trading. So I do that by taking more conservative trades. But as you can see, crack lower day, went sideways again, tried to get above that. This previous support becomes resistance at this point. So this is the new ceiling at this point, the 667 line. 667 line. I don't even know why I clicked that. I didn't do that. Still put it down there. So came down, bounced up, went down, and just downtrended from there. I think it finally found the bottom at six or near six, which is super ideal to cover into. And now it's kind of making a comeback. It may bounce up to 670. If it does bounce up to here, get back above 650, maybe get to 670, 680s. It may be a revisit for a short, but I'm done with this. I'm moving on. Not for me anymore. But that's it. You know, Going back to 5 minute chart, short into the bounce. Wait for it to do whatever it's going to do in the morning. Ideally, you wanted to spike towards red green, which is way up here. Um, and whenever red green is so far, you got to use whole dollar, half dollars to kind of gauge the strength of the stock. If it got past 750, then I would have been more hesitant to, well, I would have been shorting into that strength, but I would not be surprised if it tried to retest the high sevens just because the red green level is right there. But nonetheless, the statistics don't lie. And whenever these overextended stocks start scapping down, the odds that it goes lower is like 90+%. So, yeah, that's all I got for y'all. Have any questions? Hit me up in chat, whatever, Twitter, Ace Boogie, out.